Hey everybody, it's Steele, and this is the 8th video in the series of videos that I'm doing about chart reading, leading into some videos that I'm going to be doing about actually working with price and trading and things of that nature, but more on that next week. In this video, I'm going to be talking about trend lines and how I will be using the trend lines, or more specifically, how I will not be using the trend lines. If we look at the chart here, this is the United States dollar, Canadian dollar cross pair 4-hour chart as per all the other videos. We see that there's a nice up channel right here, right? And the reality is, this is easy to see in hindsight, but when it comes to drawing it in at first, well, it's not exactly that easy. It has to be fairly well developed. In other words, we have a downtrend here. Let me zoom out. We got a significant downtrend there that we've looked at several times. Then we have an uptrend right here. Well, as far as a trend line is concerned, putting it like this, or you might just not even use the rejected price zone and put it like this, it looks like this. This would be our down channel, or downward. There we go. Channel would look something like this. So we wouldn't really know that we're in an uptrend until something along the lines of right around here as far as our trend lines are concerned, which is okay. But that's not how I use trend lines. And there's nothing wrong with using trend lines to go from low to low, high to high, or whatever, to create the channels, to watch the market bounce back and forth in them. But it can be more difficult to use them than one would originally think. For instance, if you draw from this low here to this low here, you get a decent reaction right here, and then you get slightly less of a decent reaction here. You start to slip through the trend line, and then the trend line gets violated. Then you kind of use it for resistance. And you're like, oh, I think the market might be changing trend. And then it breaks right back up. And then it comes down and comes up here and again shows resistance. You're like, well, I don't know. And back and forth and back and forth. And you're like, how long is this going to happen? Well, the trend line gets violated, and it's like, well, what good is this doing me at this point? I need to redraw it. So then you might come up from the original low up to this one, and then your trend line looks better for the next hit. Look at that. It's almost right on there. This one's a little bit iffy, but it's finding resistance there, and then the same thing happens. And this is something that's pretty common in trends, because initially the trend tends to be stronger, and as it gets older, the trend itself gets weaker, so it starts slipping through trend lines, because the trend line just stays at one angle for the whole duration of the trend line, obviously. So we're not going to use trend lines like this, or I'm not going to use it, and I recommend that you think about using them. If you use them like this, that's fine, but think about changing the way you use them, or adding another way to the way you use them. When I use a trend line, all I'm looking for, at least in this methodology that I'm going to show you in Monday's video, all I'm looking for is a low to low connection or a high to high connection, and in some instances a low to high connection. But specifically, what I'm going to show you in Monday's video, we're looking for low to low connections, okay? And it can look like this. It can look like this. It might look like this. It's also possible where it could look like this. For instance, this low right here, and it cuts right through this price action right there. I'm fine with that. I don't care about that, because that's not what I'm doing. All I'm doing with the trend line is connecting two lows that I think are going to be important for one reason or another. And then the trend line gets projected into the future, and it gets used in conjunction with another price tool. And as a result of that, it gives us points in price and time that are pretty darn accurate. So I'll get into that on Monday using that, and I think I referred to it in the last video as the keys to the kingdom. It's really darn accurate. It's one of the most accurate things in projecting price and time that I'll have ever shown on YouTube. It's one of the things that I like to use frequently. But enough of that said. So basically, in a nutshell, I don't use trend lines in the traditional manner most of the time. I use them as methods of forecasting price and time. In other words, I'm using the geometry of the market to tell me more information, more probable information about the market. That's what I use trend lines for the majority of the trend line use that I use. So I'm pretty sure I've covered everything I'm going to cover in this video as far as the trend lines. I'm a non-traditionalist when it comes to trend lines, and I will in Monday's video show you how I use the trend line in conjunction with another price tool to create those targets. And then we'll go from there with those targets and the few other things we've learned about, like waiting for candles to close, or looking at the momentum, things of that nature. And we'll start looking at making forecasts and seeing how they turn out. Okay, so until Monday, this is Steele. I will talk to you later.